In early 2021, a viral battle erupted in the stock market, sparking a social uprising between the public and Wall Street. Gill, an armchair investor, noticed something interesting in the stock market and shared his observations on YouTube. This decision set in motion one of the most insane moments in financial history, brought multi-billion-dollar hedge funds to their knees, and sparked a social uprising between the public and Wall Street. Before we begin, welcome to Tales of Titans, the place where business and history come to life. So, let's get to know how a Redditor almost defeated the rich at their own game. In 2000, Bill Clinton signed the Commodity Futures Modernization Act, which ushered in the age of financialization. The financial sector began to have an increasing influence over the overall economy, with large sectors of the economy becoming dedicated to engineering creative ways to make money with money. This speculation got out of control in 2008 and caused a crisis in the global financial system. Millions of bailouts were issued for banks and hedge funds, while millions of ordinary people lost their jobs. As the dust settled, anger grew, and in 2011, it erupted into the Occupy Wall Street movement. Fast forward to 2020, a global pandemic triggered lockdowns around the world, and in the United States, about 47% of jobs came from small businesses. As a result, people started to notice something. While their businesses were shut down and their jobs gone, Amazon, Walmart, and other massive corporations were just fine. Not only this, but the financial markets began to thrive. Wealth was being extracted from the little guy to the financialized economy. With jobs gone, nothing to do, and only limited government support in the form of stimulus checks, the stage was set for a revolution against financial institutions. In 2012, 30-year-old Jamie Rogozinski, who had made some extra cash while working in Washington, D.C., started a subreddit called Wallstreetbets to gather a community around investing. The number of Wallstreetbets subscribers quickly grew past 500,000, then 1 million during the crash of March 2020. By this time, the Wallstreetbets community had taken on a mind of its own. While all this was going on, a user in the Wallstreetbets forum by the name of Keith Gill was keenly studying something he'd noticed. On his YouTube channel, Keith had laid out his game plan to buy some stock of a company called Gamestop, an unassuming store founded in 1984 and familiar to most people in the United States. Keith Gill believed that the view that GameStop was facing bankruptcy was overblown. He read blogs, press releases, Seeking Alpha articles, company notes, and more to prove his points that the stock was actually undervalued. He pulled up articles and videos of people talking about physical game discs versus digital downloads, realizing that there was still a lot of demand for physical games, which meant even more revenue for GameStop. A small group of Redditors aligned with Keith noticed something striking. 84% of GameStop stock was being shorted, an unusually high percentage indicating that big investors were betting heavily on the stock's decline. This oddity presented a rare chance for those internet denizens to challenge Wall Street at its own game. By leveraging the collective power of a grassroots movement, they aimed to expose and counteract the hedge fund's aggressive short-selling strategy. These funds had gambled on driving GameStop's stock price down from $50 to as low as $5, leaving them dangerously vulnerable. Sensing an opportunity, the Redditors prepared to turn the tables and initiate a battle of financial wits against the established titans of Wall Street. The Reddit community, known as the Reddit Army, ignited a digital protest that rapidly escalated. By January 26th, GameStop had become the most actively traded stock in the US, rivaling the trading volumes of the top 5 tech giants combined. The company's valuation soared, from under $200 million to over $28 billion within a year, thanks to a share price spike from a few dollars to over $490. This dramatic shift caught the media's attention, framing it as a narrative of everyday people challenging Wall Street's norms. As the movement gained global attention, supportive billboards popped up from New York to San Diego and beyond, rallying more to join the cause. On Wall Street, a modest in-person protest took place, while online, Redditors coined the term diamond hands to encourage persistence in holding the stock. Their strategy aimed to inflict severe financial strain on the hedge funds, potentially costing them millions or even billions due to accruing interest on their positions. The news soon reached the White House, which expressed concern about the stock market activity around GameStop and asked for conversations with the SEC about how to proceed. Secretary Yellen and others monitored the situation as the Reddit rebellion continued to play out. The stock market has been pivotal in gauging the economic pulse of the U.S. It exemplified when giants like BlackRock and other major firms netted a combined $16 billion from GameStop in mere days. While Redditors sparked the rally, seasoned traders also capitalized on the upheaval for profit. Notably, Melvin Capital, known for its heavy short positions, required a bailout from Citadel due to massive losses. Simultaneously, 3 top GameStop investors saw their fortunes swell by over $2 billion, and similar investors used their profits for personal gains, like settling student debts. In a show of community spirit, the subreddit Wallstreetbets Gives Back channeled some earnings into charitable causes. However, as the rally intensified, tensions escalated. Discord intervened, banning Redditor communications for alleged hate speech, which ironically only intensified the movement and increased the Wallstreetbets forum from 5 to 8 million followers. Facebook followed suit, banning a large Robinhood trading group which had been instrumental in the stock's viral trading. Robinhood itself then restricted buying on GameStop and other stocks, permitting only sales, which sparked widespread public fury and led to multiple class action lawsuits, as well as drawing commentary from celebrities and politicians. The collective outcry pointed to a significant disconnect between large financial institutions and the general public. The public perceived Robinhood as aligning with major hedge funds, evidenced by their financial ties to Citadel, which, along with others, gained extensive data on small investors through Robinhood. This arrangement proved lucrative for Robinhood, which garnered $700 million by selling this data. Amidst these controversial maneuvers, the SEC launched an investigation into the trading activities. In defense, Robinhood's CEO, Vlad Tanev, cited extraordinary market conditions as the reason for an urgent $1 billion fundraising to sustain operations. This issue gained further visibility when Elon Musk publicly challenged Tanev in a high-profile interview. By February, the market mood shifted dramatically. GameStop's stock price plummeted, instilling panic across Reddit's trading communities. Many users faced substantial financial losses, with some, including prominent figure Keith Gill, losing millions. Despite these setbacks, the community remained steadfast, holding their shares in the belief that the hedge funds would eventually need to cover their short positions, potentially driving the stock prices back up and reversing their fortunes. As the stock price began to wane, a new cycle began to emerge. The Redditors had moved from GameStop to silver, leading to a massive increase in demand and a price spike in silver. However, this outcome was not possible by Reddit alone, as the silver market is too large, and even the Redditors knew this. Rumor mills were swirling, and it became almost impossible to truly determine what was happening. There will no doubt be more calls for regulation. In a CNBC interview, NASDAQ CEO Adina Friedman called for the monitoring of social media chatter to stamp out coordinated stock moves. GameStop, a platform on Reddit, has become a significant part of the financial system, marking the first instance of the intersection between social media and the financial system. The rebellion, which began with the targeting of shorted stocks, has since spread globally, with some European shorted stocks jumping by 20% or more, and Tokyo short-sold stocks jumping by about 7%. This has led to systemic risks, as the financial system is complex and fragile, and the trust in the system was at an all-time low. The GameStop rebellion was a wake-up call for average people who were unhappy with the volatility and detached nature of stocks. Low interest rates, stimulus, excessive financialization, and quantitative easing have transformed the global economy from productive, innovative, and earnings-focused to a decaying husk of speculation and financial engineering. The Wallstreetbets crowd destroyed the relationship between price and value, but it could be argued that the relationship between price and value has been destroyed and manipulated since the Clinton days, when he ushered in the age of financialization. January 2021 marked a cultural shift in the way the financial market is viewed, and for Reddit users who wanted change to happen, their objective may have already been achieved. People are once again talking about the unfairness of the financial system. However, whether the new regulations stemming from this rebellion will shut down the little guy remains to be seen. One day, this story will be taught in business schools around the world, regardless of the outcome. In conclusion, the GameStop rebellion has set a precedent for the financial system, highlighting the importance of transparency and accountability in the financial sector. Well, that's all, folks. Let us know your thoughts in the comments below. Be sure to leave a like and subscribe for more amazing content, and as always, I'll see you in the next one.